Hey guys, George Rivera, Simple Lending Mortgage here. I want to talk to you about refinance today. Let me go over why and what is the missed opportunity if we don't take advantage of this today. Number one, there's a few things we already know. First of all, houses are now at all-time high values. Number two, interest rates are still record lows. So what does this mean? Your house has now made you wealth. The house that you're currently on, the house that you're sitting in right now, because of the equity boost, because of the market, and because of the rates being at all-time lows. This is the time for you to consider a cash out refi. Now, here's a few things that you can do, and I want to address all the points of them today. You see this all over Facebook. You cannot go online and not see somebody talking about drop your term, reduce your rate, take some cash out, and I can't get behind this enough to tell you, yes, this is exactly it. Right now, you can drop your interest rate. Attention, veterans, IRRRLs. This stands for Interest Rate Reduction Refinance Loan. This is a streamlined process where it is the least questions asked. There is no income, there is no job. It is basically, we're going to take your house at its value, the fact that you already have a VA loan. If you have made 7 payments on time, and you have been 7 payments from when you took the loan, you can qualify for this. Now, all VA wants to make sure is that there is an actual benefit to you, the veteran. That is a simple interest rate reduction refinance loan. FHA. If you have an FHA, there is an FHA Streamline. Same thing. If you already have the house and you have made payments on time, you can look at refinancing the loan only to drop your interest rate, and it is non-intrusive. There are even non-credit qualifying FHA Streamlines out there. There are credit qualifying FHA Streamlines. There is no income, no assets. It is so simple that it can be done in about 2 weeks' time, even less. And again, it drops your interest rate. Consolidating your debt. Listen, COVID hit us hard. We were all stuck at home, and we all purchased. We can see that as consumers, we have gotten ourselves in more debt than we had ever before because we had income reductions and we were stuck at home spending money. This is the time where you want to consider consolidating your debt. If you think about this, even if you have perfect credit and you have the perfect credit card, that interest rate was only 0 for the first 12 months to 18 months. After that, you have interest rates. Even at the best credit card term, you're paying at least 9%, right? Now, on a mortgage, you'll be paying in the 2s. So you think about this. You're going to take all this compound interest between all of the different credit cards, even some car loans. Some customers actually, look, it makes financial sense. If you can go ahead and consolidate. For instance, I just did a customer. He was actually able to save $1,300 a month. And we went ahead and took his mortgage and went from 30 years to 15 years, consolidated some debt, still put $10,000 in his pocket, and saved $1,300. So again, not every case is going to be the same. This is why you got to talk to your loan officer. And this is definitely a process that you want to shop around. There is no rush. There is no hurry. You already own your home. You just want to make sure you do something that makes complete sense. But we got to take advantage of what we have right now because we have 2 perfect things going for us. Home values are high, interest rates are low. This is your chance to drop your interest rate, consolidate your debt, reduce your loan terms. We just talked about a 30-year into a 15 years. Now, yes, when you reduce your term, your payment goes up just a tick because you have less time to pay it off. There is a little more forgiving interest rate, so there are better interest rate terms with that. Side note, I actually like the 30-year term and have you optionally make extra payments so you can go to the principal rather than you commit yourself every month to a higher payment on the 15-year term. But again, it has its benefits. Me personally, I'm a 30-year guy and optionally pay extra. Drop your mortgage insurance. Listen to me. If you had FHA, you know you have mortgage insurance. If you have because of the equity of your house going up, now you're looking at your loan to your value dropping under 80%. What does that mean for you? Once you fall under 80%, with FHA, mortgage insurance is for life. But if you refinance into a conventional, because your loan to value is 80 or under, you drop that mortgage insurance. With FHA, on average, you're looking at about $137 a month that you're going to be paying on your mortgage insurance. That is an instant saving plus an interest rate reduction that you can make work for you. So again, you can, if the numbers are in your favor, which right now they are because of, again, the equity, you can look at getting some cash out, doing some consolidation, putting some money in your bank, And not only that, but you can go ahead and save on your monthly bills and save on your mortgage insurance. So it is just in savings throughout. This is a win-win-win market. This is what we need to focus about this. Everyone is thinking about buying a home when there are all-time highs. But if you're already a homeowner, you need to consider the benefit that is also a side effect to you is that your house is now worth at an all-time high. And this is where you want to take advantage of your home's wealth. Because right now, if the market slows down and the value of these homes go down, later on, we may not have this window of equity opportunity. Think about this, home renovation. If there's anything that COVID taught us is that when we got stuck at home every day for 24 hours, there is a lot of things we started nitpicking about our home. There is a lot of things we started realizing that we really needed if we were going to be stuck at home for more than 8 hours. Home renovation, this is the moment for you to get the funds at the lowest possible interest, because you could not finance a loan for home renovation compared to what the rate would be if it was in your mortgage. Cash out. Right now, everyone is worried about the economy. Everyone is worried about what's going on in the news. Listen, I don't know the future, and I'm not here to talk politics, but what I am here to tell you is this is a moment that you can also do cash out and make that money work for you. Let it earn you interest. Put the money, put it aside. A lot of us realize that this was the time, working from home, that this was the time for us to all go and become self-employed. You know what? You have a project, you want to renovate your home, you want to pay some bills, you just want to put money in the bank. You know, this is the best way to do it at the lowest rate. Think about this. When you're paying interest on your car, on your credit card, on a personal loan, this is the interest that's making money to the bank. When you're paying interest towards your house, when you do your taxes, guess what? You can claim that interest. That interest actually works for you. And the fact that you're taking an average of a 19% interest. That is actually the average compound interest between if you have credit cards, if you have car loans, if you got personal loans. So right now you're talking about taking that and putting it in an average of what? Let's just say for the sake of the conversation, 2.5. That is a 2.5 interest rate that you can actually claim when you do your taxes, because it is a writing number compared to personal loan, which you can do nothing with. You're making your house, your safe haven, work for you. Again, Georgia Simple Lending Mortgage. This is the time to refinance right now.